When you hear the word insurance, what comes to mind?
Paying money against a certain risk that may or may not occur.
To secure yourself for a rainy day.
Security in the sense that
The benefits of insurance is not immediate.
I think the beauty of insurance is that there is something on the market for everybody.
But think of all the things you can do with compound
Yeah.
interest. You
Yeah.
could
Okay.
have an even better life. You could even live more lavishly. So why not?
Yeah. So I think the Enterprise Personal Pension Plan is a very, very good option for somebody who's looking to save long term.
so if you have your money in your susu box, please break it today and look for Enterprise Trustees account. If you should look into your account right now, would you say I'm proud of you or
I would say that.
Hello everyone, this is Young and Invested, proudly brought to you by Enterprise Trustees. This is another episode of Young and Invested, and here we talk about money, real life, and everything that has to be with the youth in Ghana. And today we are getting into the topic of insurance, savings, chop now or chill later. And we want you to sit back, get your headphones, and stay tuned with us. I have some amazing guests in the building, and you don't want to wait to have them. I have Helen from Enterprise Life, Bafo from Enterprise Trustees, and guess what? Miss Malaika 2024. I have Lucille in the building. I'm so excited to see you. In fact, I feel like a queen already, you know? Please give us that kind of, yeah. All right. So it's getting excited already. I want you to sit back, even as we dive into the conversation and break it down for you. All right, so this is the situation in Ghana where we have a lot of insurance companies coming to you sometimes to sign up or anything. So there is this kind of conception that or perception that people have developed about insurance. I just want to find out, when you hear the word insurance, what comes to mind? Does it feel like something stressful, like a scam or something? What comes to mind?
For
Helen?
me, security. Security in the sense that it serves as a safety net for future expenses. And it feels safer to know that you have some money available to cater to other needs if they arise. So for me, security.
Okay, so let's break it down for someone who doesn't know at all, like what insurance is. Like, what is insurance?
Putting money aside for a rainy day. That's how I'll explain it to the layman.
Okay, Bafo, what do you think about that?
So essentially, insurance is paying money against a certain risk that may or may not occur. And so, yes, you're putting money into an insurance cover. It may occur that the events that the unlikely events that you are looking to happen may or may not occur. So once you pay a premium, as we say in insurance, you are covered, and so it takes away the stress.
So a premium is more like a payment.
A payment,
make.
yes.
Okay.
You pay to take an insurance cover against a certain unforeseen event.
Okay, so what does insurance mean to you?
I agree with Helen. I think it means security.
Okay.
I think it means putting something aside to make sure that when something, God forbid, something bad happens, you're covered. You don't now have to be reaching out to friends and family to ask for favors, which can be quite embarrassing. So yeah, it's to secure yourself for a rainy day.
Bafo, that's amazing. Bafo, so if you should look into your account right now, would you say I'm proud of you or this account is disgracing me?
For me, I would say that I'm proud of myself. Yeah.
That's nice.
proud of
So
myself.
more like you have yourself sorted with insurance, you have covers that are working for you.
Yes. So if you understand the position insurance puts you in, right? You have that comfort, and doing it is not stressful. It doesn't feel like a scam, right? So for me, yes.
Especially if you understand what
if
you're
you
doing.
understand it, yes.
Exactly.
Okay. So just to give some examples, what are some of the insurance, let me say, policies that one can take advantage of for someone who has had insurance for the very first time? You're saying putting money aside. What should I put money aside for? Is it for my kids? Is it for my school? Like, what do we really have to insure?
Well, it depends on what your needs are.
Okay.
Yes, because if you don't have kids, obviously you won't be thinking of putting money aside for them. But maybe you have a car, so you go for the car insurance. That is even mandatory in Ghana
Okay.
now. And then maybe if you're older, you have a lot of people depending on you, you go for life insurance. So it depends.
Okay, but what do you think?
So just to get an understanding, so there's the life insurance, and then there's the non-life.
Okay.
All right. So essentially, life insurance will have anything to do with you, the individual, those
Exactly.
associated with you, your family. Non-life will be any asset you own. So say a car,
House.
a pet, yes, a mobile phone.
Yeah.
Yeah, all those are. You
A
can.
mobile phone?
Yes.
Yes.
Yes. So
Okay.
there's actually
This is my
provision.
first time hearing that.
There's actually provision to take an insurance cover to cover
Insurance
electronic equipment.
Okay.
Yes. So that's the beauty of insurance. It's a broad range of options that you can
covers,
choose for
yes.
Of
based
course.
on your needs.
Okay, that brings me to my next question. You know, insurance in this case, sometimes when people hear insurance, they only think about, oh, like those with cars, only those with cars, only those with buildings can insure. Do you think insurance is for people, like is for students? Can students have insurance for themselves? Can people who are now starting life or starting their career have insurance for themselves? Or is only for the big men?
I think it's the
think
fact
it's
that insurance for younger people, especially students, I don't think it's advertised enough. So maybe young people don't know about what's available to them because the typical ones we hear of is like, life insurance. But there are other
Okay.
things like they could get health insurance, they could insure their phones, because there are all sorts of things happening now with people stealing phones
Yeah.
and whatnot,
Yeah.
damaging your phone. So I'm thinking from a Gen Z perspective, like travel insurance, phone insurance, but I don't think it's advertised enough. So young people don't really know what is available for them, and they don't know maybe it's whether or not it's within their price ranges, because of course students are not earning that much money. So I think with more advertisement, they'll get to know what's available to them.
Yeah. Okay.
And there are starter packages for young workers and students.
Let me hear it.
Yeah.
I'm
For
interested.
Enterprise Life, we
Okay.
have packages for the students, so you can purchase that if you're in school. And and in general, to savings, young workers, students can go into that. They may not have huge benefits immediately, but it's a good start, and
Okay.
over time it builds up.
Okay, so just to veer off a bit, insurance. Aside insurance, there's so many ways that you can secure your future, your financial future, and it's also on savings. And with enterprise trustees, you can also start as low as you can, like 5 cities. You can start
Yeah.
saving. So insurance shouldn't be a big deal. If you're watching me and you're a young person, insurance shouldn't be a big deal. Like it has to be my father insuring for me or my parents or big people doing insurance. You can start as small as you can. And if you're a young person and you want to build your financial future, I think you should start now. Just to remind you to start now with enterprise trustees in your savings. You can dial *714*333# to sign up. *714*3333# to sign up. Now, I want to also ask if you want to explain insurance to a young person, your younger sister, your cousin who is very young, he's not going to SHS. How do you explain in terms of food? How would you explain insurance to such a person? Would you say that insurance is like buying wache and paying later, or would you say insurance is like paying small just so that you can buy the wache?
For me, I would say that insurance is more like buying the watch in bulk,
Mm.
having some to eat today, and then having some for tomorrow as well.
Okay, that's
Yeah.
quite interesting.
Yeah.
I think I'll go with the second statement. Because with insurance, you are paying premiums to enjoy a larger benefit.
Okay.
Yes, I'll relate the first statement to savings because, for instance, I mean, you receive your income, you allocate an amount for spending, and then you put some aside for another time.
Yeah.
So that's how I'll see it.
The second option, definitely, because I think insurance, the benefits of insurance is not immediate. It takes time to see the benefits of insurance. So I would go with the second statement, definitely.
Okay. So I just want to ask like a quick question. If your phone cracks today, your iPhone 16 Pro Max cracks today, would you first think about insurance, or you're like, oh, how can I fix this with my bank account? What will come to your mind first?
Ideally, insurance.
Really?
I know
Yeah.
most iPhones, you have the option of getting, I think it's called Apple Care,
Okay.
but most people don't get that because it's kind of unlikely that something happens to your phone.
Your
So they
phone,
think
okay.
it's a payment that doesn't make sense. But then
Okay.
they realize when something happens, then you know. So yeah, it's a tricky one there.
Okay.
I would have wished insurance covered it.
You would have wished
Yes.
by this case.
It might be too
Because
late.
if your screen gets cracked, the cost to repair your screen now, in some
iPhone
cases, it's
16,
better to
yeah.
buy a new phone again. So, yes.
Yeah,
That's
So the
true.
first thing that will come into your mind is not insurance.
If I have insurance, yes. But
Okay.
if not,
I think you have to
for
have it prior.
Prior to
Before
yeah,
Something
exactly,
happens,
yeah.
then
If
no
I
one is
have-
going
Yeah.
to insure
Exactly.
the phone
Yeah.
because it's already
if it has
Yeah.
happened, yes.
Because if you understand what the phone is worth to you,
You
Yeah.
insure it
Then,
when you buy
yeah.
it.
That's true.
Yeah.
That's very
Yeah.
interesting. So aside that, if you don't have insurance, I think that young people are some young people are quite materialistic, such that even when they acquire some gadgets, they don't have it in mind that one day it can get missing, and one day it can get spoiled, or it can get ruined one day. So how can I make up with it? So you see people making so much efforts to acquire things, but they don't have the safeguard for those things. So they don't have the maintenance culture for those things. They don't have the savings in the bank to keep that. The fact that I have it and everybody sees that I have it is what makes them
Yeah.
excited. And that's one thing that I'm worried about. If you are so much inclined into acquiring some things and you don't have in mind that you need to save something somewhere, so that one day if it fails you, you'll be able to fall back on it. Anyway, I want to ask the second question. If you can just let me know, if you are earning between 1,005 and 2,000, what's the most realistic amount that you can put aside for your savings?
1,005 to 2,000.
And this is very common, like someone earning about 1,005 to 2,000 is very common in our
In
1,005
Ghana.
is even expensive.
Yeah, in some cases, yes. It's
So
quite
if you're
something.
earning 1,005 to 2,000, what do you think one can put aside a month for his savings?
Realistically, for me, I think 200 to 300 cities. It may not be much, but it's consistent. So, and to avoid you from starving. So, 200 to 300.
200 cedis.
Yeah.
That would be
Because
not like
the reason I'm also saying that is you may think that, okay, let me save half of my income, you put it aside, and during the month, you have expenses to cater for, and then you end up dipping into the savings. So
Okay.
it's better to know your budget, know your lifestyle, and put aside something that you're comfortable with. So for me, 200 to 300 with that salary.
I
That
like
can
the
be
lifestyle
consistent.
bits. Lucille, for someone earning such amounts, what kind of lifestyle do you think the person have to adapt for someone earning?
I mean, you have to cut your coat according to your
your
size.
size.
Exactly.
You know? Nowadays, things are expensive, but of course, there are ways you can manage. You don't
Yes.
have to be going out so much. There's rice and stew at home. You don't have
There's
to
food
be-
at home.
Yeah.
stay home, cook for yourself. It's possible. You just have to manage yourself. Just make sure you're not doing the most. You're not trying to impress anybody and buy things because you want to show off or whatever. The time will
Yeah.
come. When you have money, you
Yeah.
have money.
You can't
Yeah.
afford that.
So just stay within your means, save what you can. I think 200 to 300 is
On
reasonable
that
to
range.
save,
Yeah.
and eventually things will get better.
Okay. But for do you think 200 to 300 is reasonable to save?
Yeah, I think
For
it's
someone who earns 1,500 to 2,000 a
2,000.
month.
yeah, I think it's reasonable. Usually, as a pensions advisor, you would recommend optimizing a budget.
Yeah.
And so in doing that, we have the 50-30-20 principle,
Okay.
where 20% of your funds goes into savings and investment. So not just savings, but
And
savings
investment.
and
And
investment,
investment,
because you need to be able to make that distinction. Essentially, for savings, you are looking to get them short term to be able to access it short term. It offers you that flexibility. And then investment, you are looking at more long term
Yes.
returns that you are going to get on there. And so 20%, yes. So between 200 to 400, I think that it's reasonable for
Okay. All right. So something just came to mind.
yeah.
You see, here in Ghana, we have NHIS that works for us. And most of the times, people go to the hospitals and sometimes they don't get it all covered for their insurance. So just imagine maybe I'm not saying this is going to happen, but just imagine your loved one falls sick or fall ill. What would be the first thing to come to mind? Would you want to fall to a health insurance policy, or you'd want to go to your aunt, your uncle, oh my cousin or my brother is falling sick, so can you help me? What option would you like to go for?
Typically, health insurance, right? That's the immediate thing you can think about to give you some comfort to go through at least that season, that phase that you are going through. Because someone falling sick can be mentally stressful, right? But once you have the assurance of some insurance that will cover a certain extent,
the average Ghanaian can afford a health insurance cover?
I think the beauty of insurance is that there is something on the market for everybody.
For
Yes.
most
So
people.
whether you are in the executive class, the mid class, or in the informal, there's something on the market
you.
that everybody. You just need to be able to, like she mentioned earlier, maybe the publicity and the visibility is not out there too much, but if you get to learn about it and know about it, there's something on the market for everybody.
Yeah.
Okay. So I just wanted to say this to Lucille. If now that I have the platform, this one I would have paid to see her. Now I have a platform to see her directly.
Wow.
So if you have the opportunity, okay. So I'm talking to you like your judge those days. If you have the opportunity to speak to Ghanaians about the worth of insurance and encourage them, what would be that thing that you would speak to them about?
Okay, so I would encourage them to think of all the potential, I guess, problems that can arise. Because as much as we love to be positive and to pray and to hope that God has our backs, anything can happen, literally anything.
Yeah.
Your child can fall sick, unfortunately, or someone can run into your leg, anything can happen. And in that case, you don't want to be caught, in a pickle whereby you're figuring out, how am I going to pay these hospital fees? Because I know it can be expensive sometimes. So just thinking about anything that can happen in the future and making sure that your current actions are securing that and making sure that no matter what happens, at least there'll be money there or someone to help cover it, meaning insurance. So that's what I would say.
Oh, okay. I think Helen has something to say, but let's not for her.
I was.
You wanted to say something too. Okay.
No, it was the same. I was agreeing with. what
Okay.
she said,
Okay.
yeah.
That's great. So I just wanted us to also note that even as we are preparing towards insurance, if you're a young person or you're someone who is also married with kids, one thing you should also know is that you need to insure for your kids, insure for your family. It's very easy for you to say that, oh, my parents are grown and I don't need to actually do insurance for them. If they are falling sick, I can just step in anytime. But taking advantage of life insurance is very important. You can lose your parents. I'm not saying that should happen anytime soon, but you can lose your parents at any time. And it's very, very important that you take advantage of these insurance policies to secure your future at the time that you really need it the most. So we want to wrap up with this particular session, and we are going to zoom into the next section that has to do with the flags. And you want to dive deep into the next section where we have the purple flags and the red flag. So you can take a purple flag and a red flag. So the purple flag stands for a smart financial decision, and the red flag stands for a bad financial decision. So if I should read the question, you would either choose both or either of them, and you let me know
Okay.
why you chose any of them. So are you ready?
Yeah.
Yes.
I think Lucille is very ready. So let's get it in. Living paycheck to paycheck because God will provide. Oh, you people, you are not Christians. God will provide you. But why is it red? You are denying God now.
That's not true.
Hmm.
I think
No.
God expects us to be wise.
Exactly.
You know, and live within our means, meaning you just have to make sure that there's something saved for a rainy day. You can't live paycheck. It's not a very smart financial decision, in my opinion. If you want to do that, I mean, it's up to you, but I wouldn't advise it.
Okay.
Yeah.
Okay.
Yeah,
God,
I-
God will not
because-
provide.
He will provide.
He will, but like she says, you need the wisdom to be
Yes.
able to plan ahead.
Exactly.
If you are trusting God to take care of you and give you life tomorrow, you also have to plan for tomorrow.
Exactly.
Yeah.
Okay.
Because
alright.
even with the Joseph, when Pharaoh had the dream in the year of plenty, they still put money aside.
Yeah.
Sorry, they put
Exactly.
the
Grain
resources
aside.
aside.
Yes, aside. Yes,
Exactly.
These are the
exactly.
people who went to
Eh,
Sunday
so-
school.
Yeah.
Anyway, let's go to the second question. Choosing instant gratification over compound interest.
Choosing instant gratification over compound interest.
We don't like enjoyment,
Yeah,
wow.
yeah.
Instant gratification over compound interest.
But think of all the things you can do with compound
Yeah.
interest. You
Yes.
could
Okay.
have an even better life. You could even live more lavishly. So why not?
Yeah.
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 That's much better.
Just put it aside, wait a few months, a few years, and you benefit.
And you benefit
Yeah.
from it.
Compound interest.
But compound interest, but for how do you explain that to a layman?
So, I would say that for somebody who is putting money aside month on month, the benefit you get is that every month some interest accrues, and whatever is there becomes your initial capital, and that is what will earn another interest for you, and it keeps compounding month on month till the end of the year,
Okay.
annually, so and so. So essentially, compound interest is getting the benefit of starting now and whatever you have put in accruing interest for you over
Okay.
time. Yeah.
Okay. So the next question, saving for goals like rent or school fees using your EPP plan versus putting your money in your susu box.
Wait, can you say that again?
Okay, saving for goals.
Okay.
Goals like rent, school fees, goals would be very subjective
Yeah.
to
Of
you.
course, yes.
Okay, using the EPP plan
Okay.
by enterprise trustees versus putting money in your susu box.
Purple.
Purple. Okay.
Because for long-term goals, usually they are supposed to meet.
This question is for those who put their money in the susu box. So please listen.
Usually for long-term goals, they are supposed to meet a particular goal. So like you said, rent, maybe it's a house. So I'd prefer for that money to be accumulating some form of interest than to just leave it in my susu box.
In your susu
Yeah,
box.
where it's not yielding anything in return.
Okay, Bafo, you want to say something?
Yeah, so I think the enterprise personal pension plan is a very, very good option for somebody who's looking to save long term. We talked about compound interest, interest that will earn you interest. Essentially, that's what compound interest means. So you put your money there this month, you accrue some interest. The following month, that becomes the initial contribution plus the interest becomes your principal for investing again. And so for long-term goals, I think that the personal pension plan is an option that you can take as opposed to putting money under your pillow or in the susu box. Yeah.
My susu gang got sad, but
Just to add to that, imagine putting money in your susu box for, let's say, 2-3 years and inflation goes up.
yeah.
It just means that, your money is essentially less than as it started.
lost-
So
you've
lost
you might as well spend everything today and not put it in your susu box
Yeah.
if there's going to be inflation.
I really like that that view. The fact that we need to factor inflation
yeah.
Of course.
Yeah.
in our investments or our savings plans and all that. That's
Yes.
great.
Yeah.
So we want to take the last question. Treating your long-term savings accounts like your emergency fund account.
Oh, jeez.
Treating your long-term savings accounts like your emergency fund accounts.
Red flag.
So
Listen-
for me, the reason why it's called an emergency is that you would be able to access it in the shortest possible time.
Mm,
And we said long term.
Mm.
The description says long term, and so you are
Exactly.
looking at sometime in the foreseeable future to be able to access it. And so, as an individual, usually when you're advising, as a retirement advisor, you tell the person, make sure you have an emergency fund,
Exactly.
and then you can also position yourself to have long-term savings as well. That clear distinction
So
should be
depending,
there.
yeah. So depending on the need, you know
Yeah,
where to go.
where to go.
Okay. I think I really love this conversation, but we are coming to the end of the conversation. I mean, the only people I'm sad for is the susu people. So if you have your money in your susu box, please break it today
Invest it.
and look for Enterprise Trustees accounts. If you want to sign up, you can sign up using *714*333# and you can sign up. Break that susu box today. But before we wrap up, we want Helen to take us through some few products that can be helpful with your insurance. She's coming from life insurance, so
Yes.
Enterprise Life,
Life,
sorry.
yeah.
So she can tell us a little bit about that.
So with for the young people, those in school, we have education policies,
Okay.
which you can take. The minimum is 100 CDs.
100
as well as 100
CDs.
CDs, yes, you can start saving. We have investment policies too for 10 years, so that's a long term. So you can also opt for that. And the minimum is also 100 CDs, so you can opt for that and start saving towards that.
Yeah, so the minimum is 100 cities. I remember way back in school, I used to have money power from my parents, and I'm sure that students really have money.
Yes.
Yeah, so if you're a student and you're watching us, the time to have an insurance policy, you can have a plan that if you want to maybe continue with your masters, you want to continue with your education, your career,
Yeah.
in 5 years from now, would your parents be capable to be able
To
to
do
take
that.
care of you? You are not so sure of the future. So to secure your financial future, please take advantage of the life policies
Yes.
that we have actually spoken about, and we also spoke to you about the APP plan. So we're wrapping up, and
Sorry.
yeah.
So those who would also want a shorter term.
shorter term, okay.
Yeah, so we also have the 5 years, the minimum 51 CDs. So you can also
51
opt for that.
CDs.
Yes.
This one is 51 CDs. The 51
The
CDs
smart
can
plan,
actually
yes.
Smart.
is
Smart plan
somebody's
also.
data plan for the week.
Yeah.
But someone in school can purchase that.
Yes.
So, yeah.
All right. So if you are watching us, this discussion has been fruitful, and we pray that even as we have gotten to the every bit of the discussion concerning insurance, concerning savings and investments, this would be very, very vital for you. It remains your favorite podcast that is Young and Invested, proudly brought to you by Enterprise Trustees. And I've been your host, Pearl Lakai. Stay tuned for the next episode.